Hello, everybody. Matt Thomas here. I'm a local real estate agent. This is Brian Dewald, a local mortgage lender. And as always, we're just going to jump into some myth busting. We call this Mortgage Minute, and it's our kind of weekly or bi-weekly update on what's going on in the mortgage world. Brian, this week we've had some really good news. It's been a little while since we've had some good news. So I guess without further ado, why don't we jump into that and you can tell us what's going on.
Yeah, let's jump into a couple things. And before I get going too far in the new data, I'm going to, you just mentioned myth busting, and what we are going to bust this myth real quick. The Fed, at least for the next couple of meetings, is going to continue to raise short-term interest rates. We've talked about it before, that doesn't have a direct impact on mortgage rates. But if we continue to see the Fed go up, at least based on the rest of the data, and we'll talk about this shortly, we're going to continue to see lower mortgage rates. So, and basically what we're looking at here, the mortgage market really fights with inflation. Mortgage rates just absolutely hate inflation. It's a yin and yang, if you will, right? So what's happened today, and this is a really big news really for mortgage rates, and we hope that we continue to see this, and my gut tells me that we're going to. The CPI data came out this morning, which is the measurement of it's called the Consumer Price Index, and it's measuring inflation. And what had been announced recently this morning is that inflation, it looks like it may have peaked a little bit, at least for the CPI, and they're looking at data from October versus last October, and it was down just a little bit. In fact, it probably could have been down a little bit more, but there was a really good spike in October for folks going to like Airbnbs and VRBOs kind of stuff. So anyway, all of that gets thrown kind of into the mix. But we did see a drop in that core inflation number, and as a result, the 10-year Treasury is rallying, mortgage rates are rallying big time. The last update I saw was 168 basis points, which is 1.68%. That's a big number.
Wow.
To see an improvement on, especially just here we are at 11:30 in the morning. So anyway,
that's huge. Also speaks to volatility, which is it's just the absolute roller coaster. But to see it rebound that much that seems like well needed. That's for sure, much needed.
It's been needed. We were sort of had this date circled right on the calendar for quite some time. You could go back and look at all of the CPI results over the past year. And we sort of knew, looking at some of these graphs and charts and things like that the October report was the one that should have been able to beat last October. And like I said, as a result, we're seeing some improvements. There's been a lot of chit chat about, rates being back in the fives at some point. That's going to still take a little while to get there. But this is the first indication that we're on our way to some improvements. So hopefully that'll be, really good news for the entire market. We'll cross our fingers that we continue to get better. As sort of a segue there, some of the scary things that are happening is that, applications are down dramatically. We're a lot of times we look at year over year, right? So we're looking at, October's data versus last October's data, as well as everything in between. And as such, right, the entire market's down, whether it's the amount of real estate transactions, certainly refinances have come to a halt, right? So when we look at, not only the mortgage business, but also the title business and a lot of folks that are there to support real estate, we're continuing to see more and more layoffs, which has been scary. So hopefully, as things start to pick up, which I feel like they're going to, we can get some of those folks back and that kind of thing. So.
Well, obviously, affordability has so much to do with that, but, it's interesting. The perception of this time of year is that things are normally slow anyway. And they can be from some standpoint, but, people say, well, everyone's consumed by the holidays and whatnot. And it's true that some people are. For those who really need homes, traditionally, this has been a time where we actually see real estate activity pick up a little bit, contrary to sort of popular belief, if you will. So maybe we'll see a little bit of that. But obviously, people are reacting to the news. Things have been on it seems like a one-way street up from an interest rate standpoint. And it has really, obviously, that's just really set in and taken hold in the news, and then therefore is in the psyche of the American consumer, of course. But this is good news. And so, as we hopefully turn a corner or at least experience some temporary relief and some good news, that there will be then sort of even though there's might be some lag time, that there will be some follow up to that, and people are saying, hey, it's time to jump back in the market, or strike while the iron's hot, get while the getting's good, so to speak. All the cliches we could jump in there or throw in there. So, but that's great. Well, and again, that's those layoffs and those kinds of things. We're probably just going to see a bit of a lag. It just makes sense. And I was reading recently, and I wish I had this statistic in front of me, but the last time we saw interest rates increase at the rate that they have, took like 5 years. And we've seen this historic jump from crazy low to where they're at now, or where they're at, say, yesterday before this good news came out, basically in a 9-10 month span. So contrast that with 5 years. And that's just, it's really shocked the market. And so therefore we see the rough news and that kind of thing. But you were alluding, I think, to an article by CNBC recently that was really it was really meant for clickbait. It was really meant for, to scare people. Oh my gosh, the comparisons. Well, refinance business is down, as you mentioned. Nobody's refinancing because what do you refinance to? Everyone's, for the past 20 years, people have a better rate than what had been out there before today. And then you've got a comparison. It was making a comparison to this time last year, which I've, continued to remind people is a historic year. It was an absolutely historic time. So everything is going to be down compared to the absolute peak. So anyway, when you factor those things into it, and then the fact that it just has been a rougher time for interest rates, we're going to see some of those numbers be a little shocking. But anyway, the news is great, Brian. That's awesome to share. Hopefully we all see a rebound. But for those of you watching that are following the market in real time, hey, this might be a great opportunity. This is no spin. This is literally what happened this morning. And Brian's obviously presented some very compelling reasons why we might have seen a peak, why we were kind of expecting to see things slow down and cool a little bit. Better rates than we've seen. I don't know. Has it been a month or more since we've seen rates this low?
Yeah. We had so much drama in the mortgage world that it just kept going up and up and up and up. And there was very little relief. So today's a big day of relief, but also we've got a lot of ground to make up, right? To get back into the, averages, maybe. I don't even know what what we're looking for, but something that doesn't increase by 0.25% a day for, months on end or whatever the case be. So,
yeah, exactly. Well, very good. And that's, again, much needed, good information. I think it's great for markets in general, and just great to hear. So that's why we do this every week. We'd love to stay in touch with you, to be a resource to you. On a weekly basis, we try to get this information out. It's been the last couple of weeks, there hasn't been much good to report. Not that we're only here to report the good news, but there just hasn't been as much change in the market, and so we haven't been broadcasting sort of weekly. But anyway, wanted to pass that on to all of you watching. If you're looking to schedule some time with Brian or myself, please do look in the description below and schedule some time for us to connect, to talk about what might be in store and what your situation, how it could be impacted by today's rates and at the moment, substantial inventory compared to the last couple of years. So anything else, Brian?
For now, that's good. I'll have some more updates for you next week.
Excellent. All right. Sounds good, Brian. I appreciate your time. We'll talk to you later.
Thanks for having me.